Hi everybody, it's Anthony Fletcher. Thanks for coming to my channel today, A Lender's Point of View. Today we're going to discuss the difference between an FHA loan and a conventional loan when you're looking about purchasing a house. So I thought it'd be kind of interesting for you to see the scenario, to see one versus the other, so you can determine for yourself which one you prefer. Now there's no right or wrong answer. It depends kind of basically when you look at the full underwrite of the loan, which one's going to work better. But let's just look based off pricing today. All right, so for my comparison, this side here is FHA and this side here is conventional. And what I did is I used a $200,000 purchase price with 3.5% down. And I used 3.5% down on both sides because that's the minimum down on FHA. So with FHA, you have an added component. So what they have is that you have what they call upfront mortgage insurance with FHA, which is upfront default insurance, and it's 1.75% of the loan amount. So you'll see a little bit higher of a loan amount here to reflect that extra cost, and that gets added to the actual balance of the loan to begin with. So if you take 3.5% on a conventional, you're at 193. So on an FHA, you're at 196,377. And your rate, you can see your rate with FHA is actually lower, 6.625 versus 6.965%. And what I did today is I used a little bit of a discount point, in other words, buying the rate a little bit down by about half a point in fee, which kind of found the sweet spot with the loan. Okay. Now, I did use a specific lender out of about 18 different lenders. I just used a random one. So I thought this would probably be a good way to kind of review this with you. Okay. The payment based off of this is $1,257 for principal interest with the FHA versus $1,279 with the conventional. But the big difference is the mortgage insurance, the monthly mortgage insurance. With FHA, is a lot better. It's only $88 versus the conventional one, which is $177. And that's because the lower the credit score, the higher the mortgage insurance rate. Now, so this total payment, FHA, is only $1,345 versus $1,456. So over the course of 7 years, which I thought was a good number to use because most people keep their homes for about 7 years, your total payments with FHA is $112,980, and with conventional, it's $122,556. But the interesting difference is your balance at the end of 7 years is $177,924 versus $175,818. So when you look at it, this one's cost you a lot more, but you end up with a little bit better of a balance. But if you were to put the extra money into this one here, that extra $10,000, this would be about $167,000. So FHA definitely wins on this one. Okay. Now let's look at a 740 credit score because it's a little bit different of a scenario. As we talked about with conventional loans, the better your credit score is, the better your terms are. So FHA, the 740 credit score, you get a rate of 6.375 versus 6.625 on conventional. And your total payments with FHA is $1,246 principal and interest plus your mortgage insurance. So for a total payment of $1,334. However, with conventional, you have $1,235. Okay, and the reason why that's lower is because you start to remember the lower loan amount, and your total payment is $1,293. So the interesting thing about here is your total payments of FHA is $112,056 over the course of the first 7 years. With conventional is $108,612, and the respective balances of your mortgage is $177,813 versus $174,864. So in this case, if you were to take the $4,000 here, extra payment here, put it over here, you're at $170,000. So what I'm trying to say is when you look at all of this, if you've got a higher credit score, Conventional wins here are this side, where if you have a lower credit score, FHA wins over here. So I thought this would be a good little exercise for us to review today. And thanks for coming to my channel. Sure appreciate it. And we'll see you again on a later date. Bye now.